This war is costing investors dearly. Since it began, Indian indices have lost nearly 8%. They saw some relief today, a 1% recovery, but it's only a fraction of what they've lost. There's only one asset which has remained steady throughout, and that is Bitcoin. It has outperformed almost everything else. The S&P 500, the Nasdaq, even gold. Bitcoin is doing better than all of them. Since the war began, Bitcoin has gained 14%.
War always leaves a trail of destruction behind it. Lives lost, cities reduced to rubble, economies shaken to their core, and markets thrown into chaos. Since the conflict with Iran escalated, investors around the world have been watching trillions of dollars in value disappear almost overnight. Stock markets that were hitting record highs just weeks ago suddenly turned volatile. Even commodities have not been spared, particularly silver, which is currently trading below $80 after hitting a peak of $122 earlier this year. And that's what made this moment so strange. Because before the war began, almost everything was going up: stocks, gold, silver, while Bitcoin, the asset once known for explosive rallies and euphoric peaks, seemed to be stuck. Many investors started to wonder if the cycle had changed. Even some of the most committed crypto believers couldn't ignore the fact that Bitcoin was lagging behind while traditional markets were printing new highs. There were constant accusations of manipulation, claims that large Wall Street trading firms like Jane Street were suppressing price action, and growing fears that crypto had finally been absorbed into the same system it was created to escape. Then the first bombs fell on Iran, and suddenly the market narrative flipped. Now, as the world enters one of the most dangerous geopolitical moments in years, one asset that many had already written off is quietly outperforming almost everything else. In this report, renowned journalist Palki Sharma breaks down a trend that is catching both investors and governments off guard: Bitcoin rising while markets fall, capital fleeing unstable regions into crypto, and even sanctioned nations turning to digital assets to survive in a fractured financial system. What she reveals isn't just about price action. It's about how war, sanctions, and global instability may be accelerating the very future that Bitcoin was designed for. Before we get into this report, make sure to subscribe to the channel and turn on notifications. We cover the intersection of geopolitics, global markets, and Bitcoin, the stories that usually don't make the headlines until it's too late. Thanks, and enjoy the video.
So what explains this trend? Let's look at the current status. Bitcoin is trading at around $72,000. And like I said, it's rising when everything is falling. This may seem counterintuitive, because when there is fear, people run away from risky assets like Bitcoin. They turn towards safe assets like gold, and yet Bitcoin is beating gold. So who is buying Bitcoin? Mostly large corporations and investment funds, and they're not buying all at once. They're buying gradually, as and when they feel the price is ideal. The ETF is managed by financial experts. This pool of money, the exchange-traded fund, is managed by financial experts. Investors put money in. The fund buys the underlying asset, in this case Bitcoin. The investor never holds the actual coin. They simply own a share of the fund. And right now there is a lot of this buying activity going on. This month, some $1.5 billion has been poured in. So that's one of the factors. The other factor, interestingly, is Iran. Iran has been playing in the crypto market, although the volumes are small. When the war began, crypto activity in Iran spiked. There was an increase in crypto outflows. Let me share one estimate with you. $2.3 million moved out of Iran's crypto exchanges. The largest crypto exchange in Iran is called Nobitex. It has more than 11 million users. In this one exchange alone, there was a 700% spike in outflows. Again, this was money leaving the exchange immediately after the first strikes. And where did the money go? Well, there are all kinds of reports doing the rounds. Some say the money was taken to overseas platforms. Others say it shifted to other domestic exchanges. Going by one report, a significant portion went to unidentified wallets. These are digital addresses with no traceable owner. Experts believe two kinds of traders were active here: the ordinary citizens of Iran and Iran's state-linked entities. They were moving the funds through assets like Bitcoin. Now, this may sound extraordinary for a country like Iran, but it's a serious player in the cryptocurrency space. Tehran has built an entire crypto ecosystem out of necessity. It has been under American sanctions for decades. It is cut off from the global banking system. It cannot access the US dollar, which is the reserve currency of the world. And this makes it nearly impossible for Iran to move money across borders. For ordinary Iranians, this has made financial life extremely difficult. For the Iranian state, it has made doing business with the world almost impossible. So Iran built a workaround. In 2019, the government legalized industrial crypto mining. Licensed facilities were brought under official oversight. Iran built up a parallel financial system, one that could escape Western sanctions. By 2025, Iran's cryptocurrency market had grown to nearly $7.8 billion. Some estimates say the value is much higher. It is touching $10 billion according to them. And who owns all this cryptocurrency? One dominant player is the IRGC, the Islamic Revolutionary Guard Corps, the guardian of Iran's regime. Reports say last year the IRGC moved some $3 billion through digital assets like Bitcoin. Iran's central bank has also been accumulating cryptocurrency. It has bought over $500 million worth of digital assets. So it's not just Wall Street that's buying Bitcoin. Even countries like Iran, which remain cut off from the global financial system, are doing it. The only difference is that investors elsewhere want to just make money, and Iran wants to stay afloat. I guess that's the story of Bitcoin in 2026, an asset for investors and a lifeline for a regime under siege.
Over the past few months, Bitcoin's price behavior has confused even experienced market watchers. Instead of moving like a typical risk asset, it has started reacting more like a hedge against instability. As Sharma explains, a major driver behind this shift is institutional accumulation through ETFs, with billions of dollars flowing in gradually rather than all at once. At the same time, something even more unusual is happening beneath the surface. In countries facing sanctions, currency collapse, or the threat of war, ordinary citizens are moving money into crypto at an accelerating pace. Iran is just one example, but it's not the only one. Nations like Venezuela, Cuba, and others that live under constant economic pressure have been building parallel financial systems for years, and Bitcoin is becoming a central part of that survival strategy. For longtime Bitcoin advocates, this is exactly what figures like Michael Saylor have been warning about, that in a world where trust in governments keeps falling, capital will migrate toward assets that cannot be controlled, frozen, or printed. But the bigger question now is how long this environment of fear and uncertainty will last. Because according to recent warnings from voices like Jack Mallers, the current conflict may not end as quickly as political leaders are suggesting. Prolonged war means prolonged instability, and prolonged instability means more pressure on the global financial system. The longer markets remain uncertain, the more likely it is that capital keeps searching for alternatives outside the traditional system. And that's where Sharma's next point becomes critical, because to understand how long this war could continue, you first have to understand why Iran itself may be far harder to break than many expected. Its entire military and political structure was designed for exactly this kind of scenario, a system built not to avoid chaos but to survive it.
On March 3rd, the new defense minister was killed, and he was killed within a day of his appointment. On March 8th, top IRGC officials were taken out. On March 12th, the missile unit commander was killed. On March 17th, Ali Larijani and the Basij commander were killed. And today, the intelligence minister, Khatib, he's been killed. How many leaders do you have to kill for a regime to fall? Because right now, Iran's top player has been all but erased. And yet, the regime is standing. It is standing because Iran was built for this. It has planned for this scenario for decades. Iran follows what it calls the mosaic defense model. It may sound complicated, but it's actually very simple. Think of it like this. Most countries are like building blocks. If you remove the base, if you remove the top leadership, everything collapses. Iran is more like a spider web. You hit one node and the web shakes, but it does not break. This model was adopted by the IRGC in the late 2000s. IRGC, as you would know, is the Islamic Revolutionary Guard Corps, the army whose job is to defend the regime. They introduced this structure. Their commander at the time was Muhammad Ali Jafri, and he implemented it. The inspiration came from regional conflicts, especially the wars in Iraq and Afghanistan. And the turning point was the collapse of Saddam Hussein. With his death, with Saddam's death, his country unraveled. Iran wanted to avoid a similar fate, so they started working on a new structure. So what is this mosaic defense? It's a military doctrine built on one harsh assumption. In a real war, you will take hits. Your top commanders will be killed, your bases will be destroyed, your communications will go dark, and even your central control could collapse. What do you do then? How do you prevent that? Iran broke its military into multiple layers, semi-independent, regional, self-sufficient groups. There is no single point of failure, no single head to cut off. Under this system, there are many pieces. The IRGC, the Besiege Force, the army, the missile units, the naval forces, they all function like pieces of a mosaic. If one piece is shattered, the rest still hold. If leaders are killed, the system does not freeze. If communications are cut, units do not wait. They already know what to do next. Because this doctrine has one core goal: make Iran impossible to paralyze and exhaust the enemy with a long war. And that is the real story here. Yes, Israel strikes are hitting hard. They're taking out key figures, they're disrupting the chain of command, but they're not breaking the system. It's not something the Americans accounted for, and now they're grappling with a big question. If you can't break the system from the top, then how do you end the war at all?
For years, very few people paid attention to how deeply Iran was involved in the Bitcoin mining industry. Because of heavily subsidized electricity, mining costs inside the country have been among the lowest in the world, with some estimates putting the cost of producing one Bitcoin at just over $1,000. That kind of margin turns mining into more than a business. It becomes a strategic financial tool. Iran legalized industrial-scale mining back in 2019 as a way to generate foreign currency under sanctions, and licensed operators were required to sell their Bitcoin to the central bank so it could be used for imports and international payments outside the dollar system. On top of that, analysts have long believed a large portion of mining activity happened underground, using subsidized or diverted power, creating a constant flow of newly mined Bitcoin entering the market. That steady supply may have acted like invisible sell pressure for years, and when the war escalated, parts of Iran's energy infrastructure were hit, power shortages spread, and mining operations reportedly went offline almost overnight. If one of the cheapest sources of Bitcoin production suddenly slows down, the effect is simple: fewer coins being sold, less supply hitting the market, and more upward pressure on price at the exact moment global uncertainty is pushing demand higher. In other words, a conflict that was expected to crush risk assets may have accidentally made Bitcoin more scarce, right when the world started needing it most. At the same time, another major shift is happening on the regulatory front, and this one could have even bigger consequences for the long-term future of the entire crypto market. In a joint guidance, the U.S. Securities and Exchange Commission and the Commodity Futures Trading Commission laid out how federal securities laws apply to digital assets, introducing a formal token taxonomy and clarifying how activities like staking, mining, airdrops, and wrapped tokens should be treated under the law.
First of all, yes, yesterday was a real break with the past, a formal break. The Commission came out for the first time with an interpretative release that really sets a line between what are commodities in the digital asset space and what are securities. And the significance also about this particular release that we did is that the CFTC participated with us in it. And so they had some guidance that's included in that release along with our interpretation. So basically, as you said, and that tripped off your tongue very well, so that's very good, we are outlining 4 types of assets that are not securities, and those are digital commodities, digital tools, digital collectibles, and stable coins. And stable coins per the Genius Act that was enacted last year. So we're breaking with the past. We are now giving clarity from the SEC's perspective as to what are and are not securities.
The guidance goes even further, identifying a group of major cryptocurrencies including Bitcoin, Ethereum, Solana, Cardano, Avalanche, Litecoin, XRP, Chainlink, and several others as digital commodities rather than securities. That distinction matters more than most people realize. For over a decade, uncertainty about regulation has been one of the biggest barriers to institutional adoption. When companies don't know whether an asset will be treated as a security, every product launch carries legal risk. Every exchange listing becomes a potential lawsuit. Every innovation happens under the threat of enforcement. Removing that uncertainty doesn't just help prices, it changes the entire playing field. Clearer rules mean developers can build without guessing where the line is. Exchanges can expand without fearing sudden crackdowns. Institutions can increase exposure without worrying that the asset will be reclassified overnight. And when legal risk drops, capital usually moves in. That is why this moment feels different from previous cycles. On one side, geopolitical conflict is pushing people toward assets that can move across borders without permission. On the other side, regulators are finally giving the industry a framework that allows it to grow inside the system instead of fighting against it. War, sanctions, regulation, and scarcity, all converging at the same time. And if this trend continues, the question may no longer be why Bitcoin is rising during chaos, but how much higher it can go if the chaos doesn't end anytime soon. If you found this breakdown useful, make sure to like the video, subscribe to the channel, and leave a comment with your thoughts. Do you think this rally is just the beginning, or is the market getting ahead of itself again? Let's know what you think, and thanks for watching.